All right, so we just got a bullish sample after all this fun this morning, and I wanted to go over what's going on here. So here we go. Velocity went under zero, and there are the trapped orders for it. This is probably the best bullish sample we've seen today. There may be some trouble coming in here as the market has some teeth for this position. So let's go over what happened this morning. We had the market open, decay went positive, it moved and moved and moved until we finally found some trapped orders. So it was somewhat unstructured bearish liquidity that came in. The problem with this bearish liquidity was that it was looking for elasticity, moving tension down to zero, but we hadn't seen the bulls step aside. Big issue with tracking this here. Well, it dipped down. It did not reach getting bullish liquidity. You see right here, we did get velocity to go over to potentially get some more bearish liquidity, which didn't happen. The market leaned up. There we go. And here was the next set of bearish liquidity. So we have 3 times where it was set. You could say this was bearish liquidity and this was bearish liquidity because there's the signal and it took a little while and there's the sample. Finally, we get some bullish liquidity, just a tiny little bit right in this little dip here. And the volume doesn't show up until right here. And this is interesting because at this point, you can see this decay. There's a peak here and a peak here, and decay comes up and it retests that peak right there. And there's the trapped orders. So we have essentially three bits of bearish liquidity that come in here, looking to try and participate in the market. And looking at tension, you can see that the bears have tried this morning. Their tries were not as good this afternoon. The bulls get a sample. They don't really hit, but tension is rising. This decay retest hammers this down. And we have seen this for 3 days where the bulls get a position and the bears come in and they flex. They do their very best to just try and pressure out any bullish positions. And this is the 3rd day we've seen that. So what you look for is you see it moving down until you see tension curl down. We saw it yesterday where the bears came in and flexed as best they could. It accelerated down and that moved it back up. We saw it the day before where the bears came in and they sort of got it to accelerate right into the close. And then that brought it back up. So we're doing that again. And we got that acceleration right here. But this time we also got the bullish sample showing up at the same time, where the bulls could come in if they'd like to. This is the first time that I'm taking this bullish sample seriously. Why didn't I take it seriously before? Right here. There wasn't really any conflict. The market hasn't been very conflicted lately. We haven't had a mixture of stories. We haven't had something developing that like gets things going. We've just seen this side, that side, almost tit for tat kind of idea going on in the market. So I'm watching this one here, and this is important to me because I think that this spot right here is probably the best spot we've seen for nice, clean, bullish liquidity since right here back on Tuesday. And the market had teeth here where it shot down, which is a common thing. So right now what's happening is we had yesterday's, the bulls did a very similar thing where they had a bullish position show up. The bears flexed until that they got knocked out right here. And then the market, essentially what happened was the bears screwed up. So for the past 2 and now 3 days, the bears have made some pretty big errors in judgment. And the error that they've constantly made is thinking that somehow flexing is taking out the bullish control of the overall trend. And I think it's a mistake. We've seen it over and over. We saw it, and now we're getting it again. And what's happening is the bears are coming in and they're trying to extract the value out of tension and hopefully get control of tension to move things down. That's the objective here, is to get control of tension so that they can control those probabilities and drive things down. But you see, the issue they've had is Back on Tuesday, they did nothing. Back on Wednesday, they did nothing. Today, they're doing almost nothing. Their impact on tension is very little. So what's happening is they're pushing really, really, really hard to try and get things to move down and to liquidate as many bulls as possible, but they're having continuation problems because of their lack of control over the probabilities. They're just failing completely. So if you're trying to trade this area here, this range, you may have had some difficulties, and the difficulty would have been that you're looking for a highly structured entry where there's liquidity or something like that, and then the bears come in with this ferocity and you become terrified because the bears are pushing so hard. But structurally, they're too eager. I do see that the bears are here, and I do see that they're enthusiastic about selling. I think that we see that. I think we see enthusiasm in the way that this is structured right now. I think we see enthusiasm. But I think it's misplaced, at least currently. So this bullish sample right here, sorry, this one here, we just got, and it looks like the bulls are doing very little, and I'm keeping my eye here on tension, and I expect a little bit of difficulty here because of the teeth concept. And teeth is when you have a root position. Let's say it's right here, and then prices move up, and then you get a secondary position, and oftentimes the secondary position is free to be pressured without really pressuring the overall, I guess, cash average. So these secondary positions, you have to be careful of the teeth. It doesn't mean that the information or the data was bad. It has to do with the structure of these positions. So we're seeing this come in, and we're getting a dive down here, which I think is pretty common during teeth. Now the thing that I'm looking for is I want to see if the bulls start to exert their influence over the market. Basically, I think the bulls sort of came in here and then just sat back did almost nothing yesterday, and today just are sitting back, and I think the sitting back just has to do with, maybe some better positioning. The idea here is that if the bears are going to drive elasticity, their objective is to get tension down here to zero. And the first thing that they really need is we had the bulls miss right here. So you could take this as the nod, the time when the bulls say, yeah, you guys can have it. But they're going to need some sort of positioning. I have a hard time thinking that we could have so much bearish blundering for all of this time, all of this. And then finally the bulls give a nod, and then it just goes. I think that the bears are going to need a better position, and perhaps the decay retest was all they needed. But it seems to me that there is a lot of positioning here, 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 and it was all just jumping the gun. And so I think if the bulls decide to just basically sit back and let the bears push this down to zero, like that, and then the bulls try to pick this up, I think the bulls at this point are going to be in a pickle because they permitted. This is not a matter of being forced to or anything. They allowed these bears to position in all these spots throughout, all these spots. They allowed all this positioning to go on and did nothing about it. They permitted the bears to come in and sell things off a whole bunch, and then permitted them to push them out. They let them do it. And then at the point, if tension gets down to zero like this, then the bears are going to have this advantageous position, and the bulls are going to be stuck in a situation where the bears have some capital on their side. They have some winners that they can use to, they can add to it. It's better to operate from a position. That's much easier and better for institutions to do. They like that better. So essentially, this would be their root position, and getting this down to zero. would be a problem for the bulls. So I think that it's not in the best interest of the bulls to let this get down to zero at this point. I think the bulls need to step in and they need to defend the market. They need to pick up some liquidity and they need to pressure these positions, the ones that came in up here. These ones gotta go. I think the best thing that the bulls could do is to we see some little things going on here. We could look at that. Maybe we get this up, have a bearish sample, turn that upside down, get this going and pump this thing up into tomorrow. That would be the best thing that the bulls could do right now. I don't think that moving the market lower is in their best interest because they're giving these bearish positions this like foot in the door, a big leg up. And it's a problem. If they don't think it's a problem now, it's going to be a problem because if they don't do anything, it's a matter of when tension gets to zero, it's going to become a problem because all of these positions up here in these highs are going to be helpful in pushing tension through because they have capital to work with. They have positions to operate from. It's giving them a big leg up. It's better to have a high in the market that doesn't have any great positions and then let that move down. And then those positions, aren't as strong so we can push things back up. But now we've got these operating positions here. It's going to create some issues for the bulls if tension gets down to zero. If they don't step in here soon on this, decay is giving us our last sample here. If this pushes through, then the bulls won't have any other options. Pushing things down will give them liquidity. Velocity, there's no sampling here. So this is going to be their last option for liquidity. So if this pushes under and the bulls do nothing, then the next option is going to be a decay retest here. And then that'll be the spot where the bulls will have the opportunity to come in and pick up a risk reduction. The thing that would be an issue with that is that I don't see so far today anywhere that the bulls really have established that they're interested in participating in this market. So if we had seen them hit here before it came down, then I would say, okay, we see interest. This sample here, but no hit, it's drifting down, decay is getting down to zero. We saw them hit here. We're not seeing any of this activity. We're seeing the bears get this edge for almost no reason. And you have to ask yourself, what the heck? Why are you guys allowing this? Because this bullish position right here, this bullish liquidity, could have moved up and turned these positions, let's see, it's right here, these positions upside down. All these three positions could have been used to drive this up and get liquidated and pop the market up. But instead, a decay retest came in and turned the bulls upside down. So what the heck is going on? Why would you allow that? And remember, the bulls are still in control. We can see that. 30-minute, still up. Daily, still. The bulls have total control of probabilities. It's not a matter of did you win or did you lose? This is a function of why are you allowing this to happen? Because that's what's happening. It's being permitted by the bulls. So we could see these bulls did not pick up this position. They're not having an impact. And what's happening here is the bears are continuing to get motivated. The bears are looking to get tension down to and through zero. And that would, down here. And the issue that the bulls are going to run into is that they've given so much leniency to allow these bears good solid liquidity positions to operate from, a decay retest that functioned alongside. The bears are gaining traction here. This is a problem for the bulls, and the bulls have enjoyed some supremacy for quite a while through here. I mean, you can see it. So this dive here, if you're asking what's going on here, it's these bearish positions who anticipated some trouble, captured a bull upside down, pushed it down. And now that this bullish position didn't hit and it came down, they're going woohoo, and they're adding to the steamroller and they're pushing. And now the bulls are getting their last sample here, and this is causing some problems for the bulls here is if they don't come in and pick up some liquidity, they're going to be running into a big problem. We've got a steamroller going. They are operating from a position. This is not helpful for the bulls. So you could see this has gotten more and more aggressive. So let's see what 30, 35, 36. So at this point, we could see that the bulls have essentially stepped aside. They've moved out of the way. I think this right here makes it pretty clear. It's like, oh, we don't really want to hit this. So that's the nod. And so now these positions are coming in and they're saying, okay, well, if you're going to let us have it, let's go ahead and have it. So what I'm going to do here is start looking back, and I want to get an idea about the positioning from earlier. Where were the bulls? Where were the bears? We could see that right through here. Let's see, slide this up a little bit better. Right through here, the highest bearish position was this one. We can mark that out. And then this down into lows was the best bullish position. So I'm going to mark that out, and I will color it green. And I think these are great markers for essentially where markets are going to be operating around as the market moves down. We're going to be looking at that. The other thing the market's going to be looking at is liquidations. And you can, let's see, let's take a look at yet this right here. This is something that I think that is a thing. It's not as strong because it's from the previous day, but I'm going to mark it out anyway so you can kind of get that. You see that it was a multi-day decay retest right into this low. There's the trapped orders, and we had lurching volume up. So right below that is going to be where those stops are. You can see we already blasted through that position. So we're basically moving on past through that. We're getting right to that last bearish position that was upside down. So this whole move up from here up to whatever the highs were in this area, this was the last position before it really popped and took off up into this upper range. And so we're getting there. And the next spot below that's going to be where the bulls were sitting at, which is going to be down there. And I think that we're looking at this decay retest. If you can see this pushed under here, and there was time for the bulls to come in and pick up liquidity. See that? It dipped under, and then this happened. So we're not seeing something that encourages me to think that the bulls are going to be picking this up. Now, what do I usually think in these situations? Hey, Brian said, hey, Bacon. What happens is when we get 30-minute starting to get close to or is looking at going to zero, sometimes the bulls will step out of the way and allow basically it's like, well, we want to pick this up down here. I'm not sure that I think that this is that, because usually that's in a situation where we're moving at this kind of speed, like if it was like going like this, then I would say, okay, well, they're probably just going to move because it'll be a couple minutes. But the way that this is moving doesn't tell me that we're going to be getting to zero by the close. What it tells me is that it sort of stopped. So I'm not interpreting this as bulls going, oh, let's just step back a little bit. We'll get some better positions, I think what's happening here is that the bears are very enthusiastic. We've seen big sweeps down from these bears. And we saw this decay retest, and they finally caught a position upside down today. And big sweep down, and then the bulls, it pushed all the way down. It leaned down. Scoot this over. It leaned down, so the market was moving down into a sample. And the sample happened, and just bulls did nothing. Decay is now under. We got that sample there, just nothing, and we're back to this. So basically these bears, if there are any, which there shouldn't be, they're now at break even. And so we're losing that footing that the bulls are using partially to maintain their position. You can't just let people on the other side get back to break even and think that you're still in the same amount of control of the market as you were. So we can't just drop this under their position and expect everything to be hunky-dory for the bulls. We should see things change, especially with tension and with positioning and how people respond. So this is a sort of a sensitive spot here. The bulls let this go and it gets under there. Then the next place is going to be these bears are getting more and more motivated, and they're going to be running for the next place. It's not looking good for the bulls. This one, okay, I see them missing that. It's up at the highs, maybe drive down, getting here, but missing this, and then right there, and now we're back to here. We're going to be looking at a decay retest, almost immediately knocked through all that bullish liquidity. Bulls, what are you doing? What are you doing? This isn't the same as before. We get tension down to zero, you can be running into some real problems because these bears have a position to operate from. What are you doing, bears? What are you doing? So, I'm waiting, and I think the conflict essentially started right about here. We had a little back and forth, and I really liked conflict. Once we saw this dip down, that's when I was like, okay, these bulls are upside down, these bears are in a position, bulls have control of everything. Conflict is coming. And now we're seeing the bulls just step aside and do nothing. I mean, literally nothing with the bullish positions, which leads me to think this market is headed their root position for this leg, which I think is mostly here. We could go back a little bit further, but I'm not going to mark that out until we get to that point. So we have bulls just being like, meh, for some reason. And tension, you could see, like, we still have a while before tension get to zero. And I think this is extremely motivating for the bears. The problem I think the bears are, if they're going to run into anything, is that they sort of went about this improperly. So I think that they're really flexing here. We've seen a couple of flexes, but this is, I think this is showing really flexing. You could see it's getting parabolic. Things start to struggle when you get parabolic. They're really trying to go. I think they see that they've caught some people in upside down. I think they saw that the bulls did very little, and they're going, oh, this is our chance. Let's see if we can shove this to get our probabilities down to zero. So before, this first push was not about getting tension down to zero. It was about getting tension to curl down. And it finally curled down. It was like right about here. And then at that moment, velocity was so close, I was sitting back going, okay, let's wait for that. So we got down to that velocity sample, which was after this. So it's here. We got down to the velocity sample, and I wanted to see if the bulls were going to do what they were going to do, and they did nothing. And I think that this was normal stuff. This is when things got different. And then we got down to the next position, and I think the bears have just flexed. Now, here's what I think is going on. I think the bears are about to run into some problems. While yes, they were able to get through the liquidity, and yes, they were able to flex themselves down to get this position positive, there's this one issue that's popping up right now. You just added a +1 mouths to feed, so you're going to have to find more revenue to generate. You have not knocked out the bullish control of the market. This move down was quite aggressive, but it is not represented by tension. This is absolutely not represented by tension. So they're about to run into some issues. They didn't actually gain any footing when it comes to controlling tension. They're now going to have to find more people to get blown out to deal with the extra mouths to feed. So this is going to get harder to move down because of that group there. The next thing is that they don't have any other positions. So these positions were before I think they knew that the bulls were going to move. Perhaps there was some communications between the bulls and the bears, whoever that may be. But this was, as far as I can tell, before. Once this happened and they caught them in, I think that's when it got exciting. They were like, oh, okay, we can go. So they didn't really know here. I think it was a bet. So they're going to need some further positions. So right about in here, I think the market is about to say, hey guys, all right, that was a great flex. Now you need something else. You guys are going to need some bearish liquidity. You're going to need some more stuff. What are you going to do? How are you going to fund this? Because currently, if you can't do this 3 more times, tension is still above zero and we're headed back up. So what's your plan? What's your plan right now? That was a great push. Really proud of you. Good job. But what's your plan? So if these bears can't figure out a way to fund that, and sure, they could come in and just dump capital into it. If they want to go ahead and spend all their money and just pump this down, that's totally possible. But I think it's an incredibly inefficient use of capital, like incredible. I think pushing this down to here took a lot of effort and was expensive. My imagination is if you had a $100 million account and you decided that you wanted to do this on your own, you couldn't afford it. So collectively, most likely you're putting $20 million on the table to help this push down. That's what this looks like to me. If you're a bearish and you're a fund, you are putting down a lot of money to make that happen. maybe there's some event out there that happened, some news event. Maybe people are excited. I don't know. I don't really care. If the point is that this was an expensive move, and if they're going to get tension down to zero, it's looking like they're going to need to do this again. Or I suppose we could just hang out down here, let the market and momentum sort of catch up, and over time it would make its way down. That's a possibility too. But this scenario where you just sort of sit back and hold, you have to hold the market there against the controlling party who could pop this back up and put all of your capital at risk. You're going to have to be fighting that the market wants to pop back up in their favor, in that all they have to do is say, yeah, we want to pop up, and it would do it because probabilities are in their favor. So there's no like resistance there for that. So the risk here is that the bears could keep this here and tension could continue down, and that's okay. But if the bulls came in, they could pop this back up. We could see just a real sharp change there. So that's the risk that the bears are taking. So as this develops, you need to keep in mind what it is that the bears are actually facing so that you can interpret what it means for this to move the way it is. I mean, this is a pretty aggressive move. You can see both decay, velocity, and price all sort of have this look to them, and then we see that tension hooked down. So somebody's pushing. They have said, all right, let's go, let's get this done. But I'm sitting here watching this, and I know it's aggressive, and I know it's terrifying. I know that, but at best, they're going to get tension to zero at the close, it looks like. I mean, maybe it continues down. Maybe advanced decline gets down to like negative 2,000 by the close. Maybe that's the case, but that's a pretty intense. I don't see that happening. This looks to me like a really, really nice, beautiful flex. Good job, guys, but you didn't get tension even close to zero. This market's going to fold you over. And unless you can come up with some mechanism to make that happen, it's going to happen. That's how this looks to me. It was an aggressive move, and I'm not like saying you should have held a long position against it. What I'm saying is that structurally, when this move ends, when they stop putting millions of dollars into this, this is going to show up. So, if I was a big institutional bull, I would just say, well, let's just wait a minute. Let's wait. Let's give them a minute. And then when they stop, we'll just crush them. Just let them go as far as they want, because as far down as they go is basically how far back up we're going to go. I would just sit back and wait. No, you guys just keep going. Keep doing your thing. We'll bring this back. Don't you worry about it. I mean, unless they're going to get tension down to and through zero. But even then, we still have a daily zero test. I mean, this is a really enthusiastic move for such little control. This is really enthusiastic for such little control. So I'm sitting here, I'm waiting for the opportunities to show up. I know it's going to show up. It always does. I see the conflict, and I'm starting to see the drama that's showing up here. The bears have gone to town on this, and they forgot to go ahead and do it correctly. So that's going to be a problem for the bears. And, maybe they push this down enough that the bulls can't regain traction. And if that happens, then the bulls are going to be in real trouble for maintaining the major overall trend. And perhaps that's what's coming. I don't know. But at this point, this looks like a really enthusiastic group of bears who are not going to be able to sustain this move down, and it's headed right back up. I mean, as soon as they stop selling, as soon as they stop filling the whole entire ask, they're screwed because tension is still over zero. And the bulls are just going to wait, and then tension closes flat, and the bulls still have control. They just get to say, thanks for your capital. I really appreciate the enthusiasm. We're going to convert all that $20 million into profits. So thank you. I really appreciate it. That's what this looks like to me. So I'm waiting to see what these bulls are going to do. It's going to give us a really good idea about the characteristics of the market, what the major overall trend is. And I think this is mostly about that. I think that there was some intraday opportunities potentially in here, but this is the one that really matters to me the most. That's why I said I think this is the, velocity got to zero. We had our trapped order show up. This is the one I think that's the most pivotal. So I'm going to go ahead and mark that. I think it's the one that's likely the most important out of all of it. So I'm going to mark it out because of the way it was timed, the way the structure looked to me. I think the decay retest was, the decay one was, important, but I think this is the focus right here. So this is the one I'm going to be paying attention to as things move forward. After that, I mean, we just have basically a bunch of positioning through this area here, which of course they would stop out above, especially if this moves back up into this area. All these positions, if tension doesn't get down to zero and it moves back up, these guys are going to be really uncomfortable in their positions because they put all that effort into it and it moved back up and tension didn't get close to that. So that would stress out those bears a lot because all of the capital they just injected into the market to accomplish this silly little feat will get converted into profits for the controlling party. And that's why I think it would make you sweat, because you were going for a move and you put a bunch of work into it, and that work ended up paying your adversary, and you didn't make any money or not nearly enough. That would be very stressful, especially as an investor. So I think that's why it would make them sweat. If this moves back up and tension does not continue down to zero, this group right here is going to be really feeling the pressure to do something dramatic. And you can see that we got through this position here. Okay. Found some sell orders right here. Those sell orders, you can see they're not here plotting in that block. So they're about done. We'd also take a look over here at this. We have an old point of control. So the longest one is 1 day back. The middle one is 2 days back, and that one, so it's like 3 days back. That's 3 days ago is what that point of control is. And we got pretty close to it there. Maybe we touch it, sure. So that's kind of where we are. As a small range, it started to expand and has moved down there. When it comes to inversions, we haven't had any in a while. The market's we had a little bit of one here, cleared out, and then today none, not really, that we're able to get over the inversion line, retest, and then run. So the bulls haven't really been able to establish some serious dominance over the bears. I think we saw some back here. I think is really right here. I think was probably the last time that I think the bulls really stepped in. This, you could look at it as bigger fished, but I think it was just a lack of action, and again, a lack of action here, and it seems to me that the bulls stepped off the throttle, and I don't know why, but I can tell you that they did, just from essentially from here forward. This looks like, a tooth, and then it played out fine and things worked out okay, and we even got to all the targets that we wanted. But it looks to me like right about in this area here, the bulls decided that they didn't want to hit, punch the gas as much, and we get stuff like this and this and this. And that's what happened. The bears are very excited about this whole thing. They're very enthusiastic here. So, I'm going to wait and see. I think that this is going to be difficult. We have this, it's a really sharp and dramatic. If the bears can get this down to zero, I think there's a chance that they're going to be going through zero, because the bulls allowed so much positioning right in the highs there and then did nothing about it. And it wasn't a huge big deal, but things have moved so quickly. I think there's going to be a big scramble. If these bulls let the tension get all the way to zero, they're going to be going, oh crap, we messed up. We should have not let that get to zero. This is now a problem. That's where we're going to be at. If the bears don't continue to invest, this type of strong capital in the market, then the market just naturally is going to want to stop and look at moving back up. So this needs to stay, if you have an EMA or something, this needs to stay down. If we start seeing prices curl back up, we're going to be looking at a huge flex, at which, this is what flexes look like. Flex. We have a flex. So you kind of get this idea that once they stop investing all that, once they stop dumping all that capital into the market, they're going to be looking at a V-shaped move back up if they can't get tension under zero. That's the game. if they do get tension under zero, if this just keeps on going and it gets down under zero, then the bears, I think, are going to get extremely motivated. And they're going to go, oh my gosh, we got probabilities on our side now. That's great. And we might get a larger body of bears to come in. So that's the game we're playing right now. We are in a situation where where the bulls have sort of slipped up, they allowed bears to do things that they shouldn't have. The bulls still have control of probabilities. I mean, at any point, the bulls could literally come in and just say, all right, we're done. Totally possible. But if they don't, and they let this get down to zero, thinking, oh, we'll just defend a zero test, I think they're going to be running into more trouble than they were bargaining for. So here we go. You watch this play out. So here's our pivot. We're getting right down to that. We're going to be looking at a decay retest. And the decay retest is, I look for a wide short, which is wide amount of time, short amount of time. I know. It should be long short, just to confuse everybody. Miguel said, if you have time, could you explain how portfolio orders sometimes indicate selling? So you tell the difference. I don't tell the difference. It's context when it comes to portfolio orders. So you'd see that the way I look at it isn't buying and selling. The way I look at it is if they're interested in the prices. And the context tells me what they're doing. So when you see stuff like this, it just tells you that they're interested. What ends up happening is if you have a market that's moving in a direction and you see portfolio orders show up in a particular area, it tells you where that institutional volume's coming in and where they're getting interested at. So you can see that they started to get interested right down here below 32, 35 institutions in this dive. That's when they started to get interested in the market. And the question is, are they just trying to pick the low? Like we've seen stuff like that. Are they just trying to pick the low here and take advantage of that? Or are they starting to fill? And that's the thing that you just don't know. I don't know if they're going to continue to fill. I don't know if it's going to get more aggressive and help drive things down. I don't know that. But I can tell you that they're here, and for whatever reason, they started to get interested as soon as we got under this previous position. That's when they started to get interested in the market. And I can't tell you exactly why they did that, but I can tell you they did. So, the events that we're looking at right now and the way that they're playing out, you could probably build some pretty good deductions about why that they've started to fill here. It doesn't look to me like they started to fill up here and they're just selling all the way down. I mean, if the market was going to crash, or those are emotionally trained, if the market's going to get bearish, a lot of times you start to see a pickup in the portfolio orders. Like when things start looking at moving down, you see more activity in the portfolio orders. And then as they start moving up, you see less. And we haven't really seen a bunch here. And I can't tell you exactly what that's about. I don't know. But I would be more motivated if they had started filling up here, And it was like, oh, you guys are just, you're starting to fill your orders. Maybe they picked up some here. We had a little price probe, and then they just started to fill. I'd be like, oh, yeah, that looks much better. But they didn't. They weren't really interested, and they don't even look all that strongly interested. I mean, look at this, just like on and off, like little tiny orders. Okay, so we almost, that's just not quite there. I like to see a retest goes through the pivot, not like right at it. So I'd like to see decay a little bit more down before I say that that's a decay retest for sure. Then in this instance, because I think that this is a measurement of a longer trend. So if you look at this chart, it's a little easier. So, I mean, there's clearly a range here, and there's this trending idea where remember we trapped in a whole bunch of bears, then we just blew them out. And then a lot of people were thinking, oh, okay, now we return back to where the channel started. And then the market sort of pushed back up. I think that's sort of the concept that's working out here, is that the market is hunting back down. We blew out all the bears who got into the situation. If you remember, the bears started, I'll just mark it, and I'll mark it. Right here was the first time I remember the bears made a very aggressive decision to come in, and I'll mark it a little heavier so you can see that. Make it 2. So this is the first time that I remember the bears coming in. They shorted the market. It failed in their face, but this is where it all started, was right here. They trapped this position upside down. They shorted some liquidity, and that was when it all began, when the bulls really started to trap in bearish positions and sort of kick off this whole channel concept that a lot of people are likely watching. And so if this is going to be a channel that blows off and come back to the beginning, that's the place to get to, is right there, on Thursday from last week. That's the spot, because that's where it all began. So if we're going to stick to the channel blow off return, that's the spot to get to. I'm tracking the structure on the internals and the intraday basis. So, we're going to get to see how it's built, what happened. When you come back and you look at this, what you should be thinking is that the bears got excited, and the bulls decided to step aside here, here, and here. And those bears got even more excited. And essentially this is two legs. It's enthusiasm, test, and then further enthusiasm. And so when you look back at this, you'll be able to say, okay, I know what was going on in this moment. Those bears got super pumped and just started dumping money into the market. And that's important, because the future comes at us, and we're moving through these areas, or we're trying to figure out what's going to happen. This is going to be an important characteristic to keep in mind. These bears got enthusiastic, and it's also important to keep in mind what their goal is. It is to get tension down through zero. They need this, because let me be clear, if you dump all your money into the market and then the probabilities move against you, you just took a huge bet on a hand that didn't work out, and it's going to blow up in your face. So they need this to come down. Like, at this point, they really do need it to come down. So I think that's why, if you have like an EMA or something that you watch like that, like, we shouldn't be seeing this come back up like that, because they put themselves in a situation where that returning back up is going to cause them big capital problems if they don't just keep going. You just got to keep going. Just don't stop. Don't stop. So that's where we're at. I don't know. This isn't my favorite kind of stuff. This is why I don't like the bears. This is literally why I don't like the bears. They came in too early. They screwed it up multiple times. They poorly structured their move down, trying to trap these guys out. And then they didn't, like, if the bears were bulls, it would have pushed down. It would have came here. They wouldn't have done anything. The market would have come up. It would have given us a bearish sample right here. It would have come back, maybe another bearish sample. It would have made its way down. And then it would have spiked down and moved. And we'd had, plenty of time. It would have made sense. The structure would be good. Tension would look fine. It would be nice and easy and structured. But the bears don't do that. They show up, and then they all just scream, go. Because this is what they do. And then you get stuff like this. And now the bears are stuck in this situation where if they don't continue to go until tension gets down to zero, they're screwed. And this is headed back up. So I find the bears entirely irritating because of this type of behavior, this type of stuff. And this is what they do. This is how bears do things. So when it comes to the major overall trend, I'm venting a little because I find bearishness just irritating for the most part. When it comes to the structure, until we see this start to have problems, this market still has bulls in control of the market. They still have the probabilities in their favor. They're still going to be coming in to participate with liquidity. They're going to defend things like a 30-minute tension zero test. So until we see that fall apart, I think the bulls are just sitting back, just like, oh, okay, they're doing this thing. Once this finally gets down to here, if the bears break that down, we're going to be looking at the destruction of a major trend, because that would show that the bears were able to get enough gusto to take out liquidity, whatever positions were there, and then further get through here and push down. That's going to be a major trend. It's going to be a big problem for the bulls, because that means completely rebuilding all the structure, which in essence means bearishness. They'll have to rebuild all the way that it's put together. They're going to have to trap in more bears to fundamentally make the lows. They're going to have to restructure the way that they position, get into new root positions, drive tension back up, get through the bearish samples and liquidity and all the retests and all the things. And it's going to take a while to kind of put that structure together in a way that's going to be effective. So, and that would be the ultimate issue here if this gets down under zero. That I could see. The bulls would be like, we have to rebuild. And that could be an issue. So if you look at it from this perspective, you might say, I understand why so much effort was put in here. I think this is why. I think that they were having sort of a difficult time trapping in some bulls. They just kept getting liquidated, and then like a decay retest would show up and the bulls would take off, or liquidity showed up and the bulls took off. They're having a hard time. And this one right here, they finally caught some bulls upside down, and then they finally caught those bulls upside down, and then the bulls didn't further hit. And I think that was the clincher. It was like, oh, everybody go. And so I think that's what's going on here. And I think the perspective was, well, if they're not going to hit and we have some trapped upside down, maybe we could get tension down under zero. That, if we can get that. So this is a big play. This is not a play looking for into tomorrow. This is a play where the bears are trying desperately to take over the major trend, the one that got us, most of the way up of this huge V-shaped reversal. That's what these bears are looking at. Just the way this looks to me is not an intraday play. This is a big attempt to try and grab control of the major trend, the one that you would probably track on at least a 1 hour or 4 hour bar chart, not when you're going to track on a 5 or a 30-minute chart even. You're going to be looking at probably an hour bar. I think that's what they're seeing here. And sure, you could say, we had a channel blow off and then we have some price action stuff that maybe happens. Sure. But I think really when it comes to structure, this is the goal. And I think we can tell that there are some serious funds behind this. So we are going to, I don't like trading this stuff. I know you could call it windfall profits, but when I see this kind of thing show, especially the bears, it's just idiotic to me. It's just a bunch of idiots. I don't like it. Sure, you call it windfall, but it's unstructured stuff that you could never do again in the future. You're not going to be able to participate in this market, at least looking at behavioral momentum analysis, and say, that was reasonable. And so I don't want to participate with these guys. I don't want to trade with the jerks who are trading right now. I want to trade with the jerks I like, which is the bulls, who tend to be more structured. They take their time. Their trades tend to work. They go where they're supposed to. They work how they're supposed to. They're very well behaved, and the bears just don't. I don't want to play with them. So it irritates me just to see them participating. It irritates me even more to see their plan work. I like to watch the bears have a plan and then that plan fails. That's my favorite thing, because usually that sets up a nice, clean, bullish setup in the near future that you get to take advantage of. That's what I like. So at this point, we've got this down. So, just think about how coordinated this attack was. I just want you to think about that. You lose 600 stocks. That means 600 individual companies magically all crossed over their previous day's close all at the same time. It was highly coordinated. This is not something else. This was getting the stocks nice right up close to their previous day's close, holding that off for a while until we had enough boys up next to there, and then just punch up everyone through at the same time. This is a coordinated effort. It's not a slide down, because this was institutions setting the market up, massaging it all day, getting it to the red spot, and then they all shoved and they were able to pull this up. That's when you look at the advanced decline, you have to remember that is a lot of stocks. That is a lot of money. And coordinating all of that to happen all in the same couple of minutes is a big deal. So it's expensive. That's what it's expensive. This is not a cheap thing to do. And if they don't get what they're paying for, which that that $20 million, which I think is more up to like $40 million now, out of your 100, like you're looking at like 40% of your capital just to push this down. Maybe that's a high number, I don't know. But you're paying for a good chance to get tension. That's what they're paying for. That's what the money goes in for. That's why you stuff the ask on a bunch of stocks. That's why you flicker your bids and your asks all over the market. That's why you slow down the orders as they ping around the different exchanges. That's how you get things. It's very, very, very expensive to do. So I think what they're paying for here is a really good chance to get control of the probabilities in the market. And I'm sure there's a bunch of retailers and everybody else who's playing too, but I don't think they matter. The only ones that matter are the people who have genuine cash, big accounts with genuine cash. So I think that's what they're paying for. They want this to come on down here, get through zero, move down. Now, we all know, and maybe we don't know this. Maybe everybody doesn't know this. Maybe it's just me that I believe this. But I think, I'm going to say this. I think that we have seen some rioting in our streets for 56 days. When was the last time you were angry for this long? Can you remember ever being angry for 56 days, for 2 whole months every day? Have you been angry that long? I'll tell you what, your pituitary gland that's sitting right there in your head, dangling from the bottom of your brain, can only handle like a couple days. 2 or 3 days of fight or flight will equal the equivalent of like 3 to 5 days of sleepy. You will be exhausted. It is ridiculous. And I think this is saying something. And I think basically what it's saying is that the market is trying desperately to blame everything on Trump. They do not want him in office. Whoever they are, I have no idea. But I also think that the market's going to do what markets love to do before. They try to make presidents look good or bad right before elections. And I have a hunch that this market may want to make Trump look bad going into the election. Just a hunch. I think so. And I think that the riots are trying to also make Trump look bad. I think it has nothing to do with anything else. I think that the moment that the president told the investigator who was looking into the Epstein case that all of his resources were at the investigator's disposal, that was the straw that broke the camel's back. Those who have power are now personally going after Trump, I think. That's just, and that's just my opinion. A guess. And I think that the market is whatever can be done, I think the market is going to try to do to make Trump look bad. I don't know what the crap is the big deal. But I think a lot of this stuff is just way blown out of proportion in stupid levels. And that this market wants to try and make him look bad. Not his party. Him. So I have this, this has like been going on in the back of my head here that we're going to be moving into the elections. And I've been trying to figure out all the next big plays that the market's going to have. And I think one of the big plays is going to be all the crap that leads up to the election. I feel like there's just going to be a lot this time, more than usual. 56 days of rioting. That's not anger, okay? That's not anger. Anger is like 2 to 3 hours. Injustice is like 2 to 3 weeks, maybe. At 2 months, okay, let me just say this out loud. At 2 months of writing, that is what's called a job. You are going to work every day, probably because you don't have a job, because you can't get one, because you lost it because of the coronavirus. So you found a new place to work and make a little money. It's a job. 2 months. Nobody feels rage for 2 months other than maybe Batman. So I'm just saying, I think that this market has a personal, I think there's some very powerful people who have a personal vendetta against Trump. and I think they have a lot of reasons why, and I think I've made it pretty clear what I think their reasons are. So I'm just keeping that in the back of my head. So when I look at a big old fat push like this and I say, why would institutions put so much money into this? And I think this push was what I like to call made to order. This structure is stupid. The way this is working out. That's what I think that was. The problem I think they're going to run into is that you can't just do this and expect it's going to last. Look, we're already running into the fruits of your oops. We have just moved down and we're getting to that point where it's like, uh-oh, crap. And this is the problem. You went ahead and dumped all that money in there. Good job. But now you have to deal with the mechanics of the market. And if this starts to curl up, this whole move down is in jeopardy. This whole move down, let me just say this whole move down, this whole nonsense move down is in jeopardy. That's the issue. That is going to be a huge problem. You did not put enough money into the market. You did not get it down under zero. And now you're going to be put in a really difficult situation. News events, sure. Whoever wants to take credit on the public stage, they can. This is not about news. I have watched this market for a long time. I know exactly what's going on here. And these bears are trying. They're desperately trying. This looks like desperation to me. I can smell desperation. This is desperation. Okay, so we got our decay retest here. We're pushed down. Here are our trapped orders. There we go. You see those new highs? They're popping up. So this is now a decay retest. We can mark out just below the low. One of the things that happens with a decay retest. Now we know where your stops are. This is a bullish decay retest. Now the question here, of course, is do the bulls want to play? Because they don't have any other options. They can't get liquidity. They now have this decay retest is in place and ready to play. So what's next? Well, usually I say that pumping tension means taking out the counterparty, and I still think that's true. But I think in this instance that the counterparty is littered through this move right here. They're just littered through here because they got way too enthusiastic over poor structure. Let me just read these comments. Alex says China conflict news. Oh, same stuff. The U.S. closed one of its consulates. Yeah, I heard about that. And they caught some Chinese people paying rioters. Oops moment. Some more retaliation. Apple is being sued by multiple states. You mean by Jeff Bezos? I mean, yeah. Brian says many stocks. So there's a lot of things going on. I think so. But if the market has done anything, it's proven to us over the past month or two that the things going on in the world do not matter to the market. I think that those things maybe contributed to some of the volatility, to the reach of the move, they helped fund some of it, but I don't think that this move was random at this point. Looking at the way that this works, I think this was and how it all happened. Looks to me, if I had to guess, can I make a guess? Can I just be like put my tin foil hat on here? I think right here there was a phone call. And right here, the bulls had to sit back because of a favor to whoever was on the other line here, and they just did nothing. If I had to guess, I'd say that's what this smells like. And then whoever made this phone call went ahead over here and started just stuffing orders above price and filling little market orders right at every little low, trying to pop through all those lows. And they went over to the stocks and they started hitting all the stocks, and they called up their buddies at the news station, and everything just started to rain down at the same time. This looks to me like a very coordinated, desperate attack. I don't know if that's how you spell desperate. So that's how this looks to me. I'm not watching the news. I'll usually check that stuff out a little bit later. I do kind of stick my nose in there a little bit because I think it's interesting, but from where I'm sitting, doesn't look like news. So, well, no, Brian, you have that a little bit wrong. They don't try to justify market movements. They try and take credit for market movements. Fox News wants you to know that only listening to them will help you understand markets. They want to monopolize credit. They want to be the only source that can inform you about why markets moved. Monopolizing credit means having control to pump and dump the world. That is if you have all the credit, you pump and dump the crap out of everyone else, and that means you have all the money. They want credit desperately. It's where all the money comes from. If you're going to invest with ads, you pay the most to the companies with the most credit. Not the companies that are most accurate, the ones that are the most credible. Credibility is massive in the news industry. It's all that matters. It's all that matters. So they want you to know, and they will tell you to your face that they were the ones who told you this because of pursuing credit. So they always show up. Every once in a while, news forgets to, we see it every once in a while, news forgets to say anything, and it's always really awkward for everyone to see a 30-point bar, and the Fox News forgot to announce, so CNN forgot to say something, and it's just quiet, and like 2 hours later, it's like, oh yeah, by the way, the thing, that I've seen that a couple times, is really awkward, because they say breaking news, and they do this retrospective thing. It's really irritating, because they're like, guess what just happened? That's why the market's up. And it's like, that happened just now, and the market moved 2 hours ago. It's like, so are you admitting to insider trading or what? Like, anyways, okay, tinfoil hat off. Okay, so we have this big, strong push. This is the focus right here, right now. This is the all eyes right here. Can this move push this tension through zero? Is it enough? Was it enough? Is this decay retest right here going to hold together? Because if this decay retest is going to hold together and tension is going to slow down, they may not get it to zero. And I really think that's going to be a big, fat, ugly problem for them. If the decay retest falls apart, if the bears decide to come in and give us another push, hit those stops down there, maybe they could get tension to continue moving downward. But they're gonna be running into problems. This little stop here wouldn't get them far. And I think if the bulls came in and pushed right here, it would be so ugly, because I think this would start to curl up as all the bearish positions through here who are so on board with this are just going to start to dump their positions. That's going to cause a big ol' furious demand to get out, because they didn't get what they paid for. And when they want out, it's going to go whonk, and you're going to go, oh my goodness gracious. And it's simply because they did it wrong. That's it. If they had waited for the bulls to move aside and picked up elasticity, this could have been sustainable. But they are running into a problem. These bears screwed up the way it worked. And that's why I think there was a phone call, is because this was a horrible time to dump a bunch of money in there. I think it was a made-to-order thing. And I think there's a lot of really intelligent investors who were like, sure, we can make that happen. These guys are screwed. Because that's what I would do. Isn't that what you would do? If they were like, we're going to dump $50 billion into this market to make it go down, I'd say, absolutely, we'll make it go down, and then right back up and take that $50 billion. Because that's what financial people do. They're jerks. That's what I would do. Okay, so that's where we're at right now. This decay retest, look, it's holding together. They're going to start biting their fingernails. This is going to be a problem. Next thing, watch for tension to start to curl. We're at -2. -144 on the advanced decline. And I just have a feeling that this 414 is going to all of a sudden be zero. When the bears realize they're not going to get the thing they paid for, boy howdy. What are you going to do? Call down and yell at the investors? Not before they take your money or not. You can yell all you want, but they won't be able to hear anything because all of your capital is in their ears. So that's going to be an issue. So that's what we're looking at right now. We're looking at this decay retest, which is this pivot to this pivot. There's that. We saw it move down, it moved down just a little bit. These little red dots do not indicate anything special. They just tell you where the highest open pivot is. So see, there's a pivot right here. Well, it already got tested by a future value. This one has not been tested by a future value. Neither have any of these. So this just tells you that that's the lowest pivot, which lets you know that this pivot was pushed through. So you got a wide, you got a little bit of a short there. I think there's a lot of anticipation behind this decay retest. And so we could just take off. It could push down another low, give us a wide short would be nice. Bulls love nice clean structure. But I think in this instance, if we just do a nice sharp V shape here and it just doesn't really come back down, or even gave us the nice classical in between, right? You get the low, you get the higher low, then you get all the stops in between. So we have our low, our higher low, and you get all those stops in between, because that's where everybody puts their stops. Yeah, and Alex, I don't mind if you post the news. Just remember that there's a lot of things that go on. So you cannot post news as a matter of fact, because I think that news has everything to do with, if let's say a news story lands on JP Morgan's desk. If JP Morgan and all of his buddies said, I don't care, that news story was a lie. They decided it. So it's not necessarily that they're just going to make this discretionary decision. It's the thing that happens is that if the market is not interested or not paying attention to a particular thing, that thing becomes not true. And we see this all the time. And then you say to yourself, but it was a fundamental. And the thing is the only real fundamental thing in the market is that the people with the money, when they move together, that's what moves the market. It's not anything else. And it's whatever they say. They're the great gatekeepers of what's true and what's not true. And so I don't disagree with news stories. I just think that they're not my focus. First of all, I can't interpret them. I assume that the institutions will pay all the money to hire the analysts to interpret what a news story really means or doesn't. And then I just watch them and shadow trade them, because I don't have the funds, resources, or time to interpret all the news stories going on accurately. So a lot of it's beyond me. There are some things that I can pretty much figure out on my own, but so my opinion is just I focus on them, not the news. It's just much easier for me to look at what they're doing and just assume that they analyzed everything correct, and whatever they think goes anyway. So I focus on them, but I don't mind the news stories. I like to know what's going on. I do. Okay, so right here, we're getting a little move back down. So I'm looking at this. You see that there's a pivot here that it moved back down there. So we got this low, higher low. We get the in-between type thing, because we get right here, and everybody who went long here is like, oh, I got to put a stop. Well, I don't want to put it down here because that's just too far. But if I put it right here, it's too close. And for whatever reason, the math is, well, I'll just put it right in the middle. This is just what people do. And then it goes down, eats up their stops. So these guys lose money. So that gets deposited. This open interest is transferred to an institution or a more informed trader. And then this loss creates a spread. So the market wants to naturally move right back up to where that they lost money. And this institution got both open interest and a little pop favorable in their trade. So I call it just like the in-between, run stops right out of the low. But if we're going to get a nice V shape, I don't think we should do that. Just keep going. Just go. Just don't come back down. But that's just what I think. If we're going to create a bunch of demand and terrify the bears who just funded this, that's what I would do. We're going to keep watching. I still haven't done anything because I think this is just craziness and this is difficult stuff to participate in, watching momentum behavioral analysis. So as this moves down, you can see we've got a little bit of slowing down, but I'm going to give this a minute. You can see how that slowed down though. And it almost looks like, doesn't look good. It almost looks like, it wants to do something like that. But we'll give it a little bit here and keep our eyes on it. That was the thing that was paid for. That right there. That. They wanted to get this tension under zero. I think that was the whole thing because the bears, frankly, have done a terrible job. This was probably the closest thing in the last little while that and the bulls came in and defended. It was a daily zero test. It didn't work. And they even got that under, it fell apart. And then all the other times, they didn't even get it down to zero. Like bears came in here aggressively. And it was like, what? And they came in here aggressively. It was like, what? So they haven't been able to do super well. So they want to get this down. That's a big deal. Once you have probabilities on your side, the world gets a little easier. The world gets a little easier. So that's what we're looking at. You can see there's more interest as we get down into this level with some more conflict, a little bit more interesting ideas. Portfolio orders are more active. So that's what I'm seeing there. I'm going, okay, I see what you guys are trying to participate in this more interesting area. Okay, so we got down. There's the in-between. We just tagged it, boop, right in the middle, because people are too conservative to put their stop here. And they're too scared to put their stop here. So they end up putting it right in the middle, and that's always the market's favorite game to play with people. It's just favorite one. It doesn't mean it's going to bounce. It just, this is common. Let's take a look over here real quick at this. See, oil had a little move. Gold has just been like, oh no, the US dollar is going to fall apart because economists, and 2.something trillion dollars, and I think that's what this is. We have a low volume node here, right in the middle. You see that? So Thinkorswim does this weird little thing that it does. If it can't figure it out, it does these little blocky. It's kind of annoying. They start to get a little more blocky, and that's just an unavoidable feature of Thinkorswim. They just love to do that. So here's our LVN. And the low volume node, the way I take it is it's sort of like this. It's like prices didn't want to be here. So when you get back up to an LVN, a lot of times you'll see the market bounce off of it or just run right through it, because basically nobody wants to be there. Those were high demand prices. So you sort of look at the LVN as places where the market prices might move around a little bit. We're looking at this here. We have an 826 on the tick. So if we got that up to like 1,000, there is a potential for a positive inversion that could be very helpful if the bulls did choose to go ahead and just ruin the bears. You can see the dollar is moving down. We had a pretty aggressive move down, and that tells me that there is, you're dropping the price on the dollar because you're getting a bigger and bigger pile, because people are moving out of the dollar into. So this is into something else. Cash is moving somewhere, and debt is, for all intents and purposes, hasn't really done anything for a while. Okay, so we got there. We're moving a little bit back up, so this is game time right here. Decay has moved down, so this is giving this is a much better little wide short, because it actually moved up away. Now it's coming back down. Some trapped orders, so we can get some new highs coming in here. To support that, the portfolio orders even stopped a little bit right there. So they're not super aggressive. It wasn't like they just started filling tons and tons of orders. There's a little finesse there. Tension getting closer, still 2%. You can see the phased or smoothed line here is on its way down. So we haven't quite gotten there yet. And we'll get another bar close in 15 minutes, which will make the most aggressive move, and will likely push this down to zero if the bulls don't do anything. Bulls shove this up now, there's a good chance that never gets to zero. I think they could pull that off, and it would be disgusting. So that's where this is. Now I'm still waiting. This is an intense play. It's not really my favorite type of thing. I like to see things very structured, set up for a little while to know what's going on with it, where it's going to go, what's happening, to see the kind of players that I like to see. And these are the kind of players I think that are high risk, big shots. And they absolutely could be coming in here to pick this up. They absolutely could be like, well, let's just go ahead and crash it again before we do that. Might as well. I don't think they're going to. Like, my honest opinion is that I think that this is going to hold together. We're going to move up. This is going to curl, and these bears are going to flip the freak out. And they're going to start dumping their position. We're headed back up to here first, and the objective will be all the way up to and through this decay retest, and we sweep through there. And that's the way that the bulls essentially trap in a bunch of monkeys to fund this move up to a new high. That's what I see coming in here. This is what this smells like to me. The desperation by the bears does not smell good. But the high risk nature of the way this is all set up and all this, I don't want to get stuck in the games that they play, but that's what I think is going on. I think we're all done going down. I think we're headed up now. But that's just what I think. We'll see. This is still the thing that everybody's watching right there. 2%. Can we get that 30 under zero? Can we get daily down to zero tomorrow? I mean, tomorrow morning, what's going to happen? Tomorrow morning, the market's going to open. If it opens down here, we're going to have a daily zero test right at the open. And I bet the bulls come and pick that up right off the open. Boom, and it's up. That's what's going to happen in the morning if we don't move up from here. So these, I mean, it's an aggressive move, it is, but these bears still have like some decent work to do. So I don't think this is going down. I think we got down. We got to the last resort, decay retest, got it all nice and pretty. We got ourselves the little stop there. We'll see. Maybe somebody really wants that decay, that tension under zero. So I'm waiting because I don't want to get trapped in the games that I think are going on right now. Let's see, just how far down would the market have to go? Oh, it's like right on top of that position. That's not too bad. It's not too bad at all. You went this far. If they go all the way down there and tag that position, they could get tension under zero. If we got a zero test right into the, no, it won't be a zero test in the close. If it doesn't, if the bulls don't do something here, then in 15 minutes, the bar's going to close for the 30-minute because this is a 30-minute calculation, and that'll move this. This is smoothed between. This is a 30-minute calculation, but it's plotted in a way so it doesn't look like this, which annoys the heck out of me. So this will likely be a positive 2% or something like that. And then that'll give us 2 more closes. We could see positive 5%, maybe, yeah, probably 5% if this just kept going down, if the bulls don't hit here. So the bulls pick this up right now and they start to curl us up over the next couple minutes, maybe like 10 minutes. And we saw that negative 1% get to 2%. There's a really good chance that in the next half hour, the market would get pretty aggressive and could slow this down. And we may not see the smooth line get down to zero. That's what could happen if the bulls came in. They're looking at some serious upside potential here. But if the bears knocked it down and were able to get down to this position, they could get tension under zero. We'd be looking right at a daily zero test, and I'm betting right into the close that would just shoot up anyway. Nope, I don't think they're going to do it. Just don't think they're going to do it. They shoot that down there. They're looking at the market folding them over either way. I think right now it's hot potato. Let's go hot potato. Okay. Let's do this. I think the market's headed up. That's what I think. That's what I think. Let's do this. These bulls hit this, and it's going to be a home run. That's all they have to do. Now, what we're going to be looking at here is we have, you see impulse, counter, and then impulse. So we're going to be looking at that counter move. Remember, when this goes sideways, it gets a little darker, you can see, just to help you see that it's been sideways for a bit. And that during that time, you sort of expect ranges. A lot of the times, if you see a counter move that gets aggressive to the upside, and this is not this market, this is just in general, right at maybe the top side of that counter move, you'll see this moving flat, and then right at the top, it upticks like that. And then that will correlate very nicely with where the things turn for a range to set up. That's just a common thing we see. I could probably just go, Here was a pretty decent, that's not exactly what I was talking about, but here we go. Right here's an example of what I mean. So here's the impulse and the counter move. And then right there, it popped up finally, whoop, and that correlated with the top side of the range. So this is the kind of thing that I'm talking about. And that's what I'm thinking when I look at this, that as the market starts moving up. Okay, so I took a position. I'm just going to tell you that now. I think this is headed up. So I'm just going to be focused on that now. I'm not going to focus on modeling out the other side. I think I see what's going on here. So I'm going to be looking for this to flatten out, and then as this sort of moves up, I'm going to be looking for it to uptick, and that's going to give me a good idea about the top side of the range there. The other thing I'm going to be paying attention to a lot is this right here. Oh, look, we're at negative 2%. These bulls start to push. Bears are going to scramble fast, and there are a lot of them. So I don't think it's going to take long for the bears to all just have a seizure and go, wah! And get wrecked. So that's what we're looking at here. This low essentially was built on bulls did nothing, bulls did nothing, bulls did nothing, decay retest right here. Stops are down below. I have an opinion about what's going on. I think tension should curl up, and if the bulls just push this a little bit higher, I'm going to be pretty happy. If they don't, I think it was a good bet. I think I have a good bet. I think I figured out what's going on here. Going into the close today, what's this going to do to tomorrow? Well, it was a bluff. I think this whole thing was a bluff because the structure wasn't all that great, and you did it wrong. And sure, it was really aggressive, but aggressive doesn't make it right. It was still just a bluff. It was a bluff. If they had done it the correct way and they had handled it properly, I think I would have treated it more. I think I would have treated it differently, but they didn't. It just wasn't right. And I think that this gets up to, I don't know, pops up through maybe this area here. It gets up to the 32, 35-ish. That everyone who went ahead and participated in this is going to hate themselves. They're going to go, oh, crap. And then you start trying to get out. And here's what people think in this situation. Can I just walk you through it? Here's what they think. You have what I call an unforgiving stop loss. So in a situation where I think this is what's developing, let me tell you what I anticipate. It moves up, and every time it moves up, if you shorted here, you remember what your you remember the balance here. So let's say it was this is that. We'll say 32.60 down to 32.20. So that's what, 40 points. And that's, so one contract would say $2,000. So what you do is you think that this trade is worth $2,000. And that's one of the problems. The first problem is that we forget that your trade is worth the current value and nothing more. So as it moves up, you're going to get to the point where that you realize that you're at $1,500, and then you try to make these compromises with the universe, which are just stupid. You say, well, you know what? This trade is worth $2,000, Mr. Universe. I will take 1,750. You know, I'm going to be generous, Mr. Universe. I'm going to take a loss on my trade that's worth $2,000, and I'll go ahead and take profit at this. And then the price goes like this. It goes, and you go, oh my gosh, and it gets up here, and you're looking at 1250, and you say, you know, this is a $2,000 trade. You try as much as you want, you cannot get that 2,000 out of your head, and you say, oh, okay, fine, I'll take 1,500. And this is when the scramble starts. You're trying to negotiate with nobody, and then before you know it, it shoots up, and you're looking at $500, and you've lost well over half. Not half, well over half. And you're moving your stop up. You're moving your stop. And finally, you get out, and it hits your position, and you took like 3 to 5 points on a 40-pointer. Why? Because you thought it was going to go to 2 billion points, because that's what it felt like. So when the scramble that I think is going to show up happens, you just sort of get this market that's very unforgiving, and it never gives those dumb negotiators the chance to dumbly negotiate out of their position. Because everyone who decided to sell is just happy. And so they're all going to be penning their take profits down here happily with a big smile on their face. Yay, I have $2,000. I'm going to take that $2,000, and it's never coming back. And that's what causes the scramble. The way you know you're stuck in one is you start making negotiations, and you start saying, okay, I'll take, and then you take a worse price, as though you have the 2,000 and you're taking less, and you're somehow giving the money away. And that is when you know you're stuck in a bad trade and you need to dump it. You're negotiating with money you don't have. If your position right now says $1,500 and you say, you know what, if this moves up to $1,250, I'll get out. That's okay negotiating, because you can actually do that. You are not taking a loss on 2,000 to dump right now. You are taking the value of the trade. And one of the issues I think that traders run into is they try to hold for profit targets that sound good, that equal, they're good to the ear, good to hear, but they don't actually have an analysis that supports those profit targets, meaning they think that because their trade is profitable, that it's also going to hit their targets. And that's one of the issues I think a lot of traders run into. Profit targets are sexy. They're hard to not look at. They're devilishly deceptive. And so I don't know that I think that this move down was backed by something that should tank. The bears didn't even get tension under zero. Look at close. Well, they got kind of close. They got to 1%. Okay, they got close, but they didn't get to zero. And that means this whole thing is still bullish. It's just a matter of when the bulls are going to come in and go ahead and defend. You know, maybe they don't, but as far as the structure says, that's what's going on. So if your analysis is like here, and you're going to go, even worse would be if you shorted these highs and you thought that you saw some bet here that was something, and then you rode this down and took a bunch of profit. You just taught yourself a bad lesson, which was to take trades that structurally are not sound, and you will pay for that tomorrow. The market will go ahead and do what it does. You have got to focus on the trades that you can structurally support, not the ones that look or sound good. So that's just some of my thoughts there about this. All right, so what do we need? There's really not much else to do here. The next thing to come in would be if these bulls seem to be holding this together, and we got our fun little stop thing. It's holding together. Our stops are down here. The next thing is for the market to lean up, which it looks like it's doing with tension or velocity, and to sample those bears. See if the bears want to come in now that the bulls have moved out of the way. But there's this problem, okay, coming up. There's this problem. If this moves up and samples the bears, this is the first time that it's really going to be elastic. This is the first time that the bears really would get a chance to take advantage of elasticity, because the bulls stepped out of the way here, right? But if the bears come in and sell when tension, we've seen this play before. If the bears come in and sell finally when they get that elastic move, and they take position and the market is out of juice, they get turned upside down, and the elasticity was a joke. It was a game. We've seen this before. And so that's what I'm pointing out, is that a lean up from here, if the bulls can continue to run with this risk reduction, that this is going to start to lean up, and we're going to get that sample. And the problem with that sample is going to be the fact that tension already released all the stuff that the elasticity would have used. It's an empty cup. They're getting handed an empty cup, and they go, yay, and they might grab it, but the problem's going to be is like, well, where are you going to go now? How are you going to fund this? You're supposed to use high levels of tension to fund your moves. Where are you going to go now? I'll tell you where. You decide to hit this, and the market's going to go thank you and turn you upside down, and that's going to help curl tension up right into the close. That's what will happen, because they've run out of juice. So I'm looking at this thinking that if we can lean that up, sample those bears, is going to freak out a lot of people. If the bears come in and pick that up thinking it's elasticity, ignoring the fact that they've lost all the probabilities that they could have monetized, it's going to get interesting. So that's the next event that I'm looking at, is what do we go from here? Well, if these bulls continue to hold this together, and this is what I think this is, then we should lean up, sample those bears, and see what the bears are made of, which I don't think they're made of anything. I think this was all stupidly put together by the bears, and it was made to order nonsense, and the institutions are just going to take the money. So that's what I think. That's what I think is going on. Okay, so I'm just looking over here. What I'm looking at is we have the point of control up here, right? You see that? And the point of control sort of moved around a little bit up there. And I've talked about this before, that when the market gets really far away from the point of control, there's really two options. Either we build up this and it pops down, or the market's just going to go back up there. And there's usually a chance that this comes back down to deal with the lack of volume. I don't think intraday markets like to be this far away from the point of control. I don't think, I get this feeling they just don't like it. So either it's going to come back up to there, or we just start building volume in here and we get a new point of control that comes down. I don't think that there's, we could move up, hit the low volume node, and then move back down, maybe fill some volume. But I think in this context, it would make more sense to sort of move up, and then maybe later on we come back down and deal with that vacuum where there should have been a move in the point of control. From the prices point of view, it's like, why didn't you have stuff down there? It's like, well, there's no volume down there, so it might want to come down. In terms of this, we had a push up. It didn't get above that 826, and like if I got everything I wanted, I'd see this push up right here, and we'd see like 1,000. We'd get a new inversion, we'd push over it, and then take off like that. That's if we got everything. That would be everything to me. Just everything I ever wanted. Okay, so we're at 7. Oh, okay. We are at 17. And so right at this 20, it just pushed through the 20. A lot of algos. And by algos, I mean automated trading systems. People trading by default love to respond to tests of 17. That's a really common thing to happen. So we see some algos show up here. If we can keep that up on the inside of the 20, then we can keep this like apparent trajectory going and get that sample of those bears and see what they're made of coming up. We still have 1%. I haven't seen this push to or through 0 yet. So that's what I'm watching here. And we have this 268. We were at what, like 414 before. Now we're up to 260. I can do this. From 414 up to 268. So we've moved up a little bit, not a ton. That's not like a ton to me. That's not the surge that I think should happen if people decide that they're going to scramble for the exits. Now, something that I'm paying attention to that I want you to realize is that I have this idea in my head about what's happening here. And if the market doesn't do what I want, I'm not going to participate. I think that there was something that was purchased and it was very expensive and it caused a scramble. And if that thing doesn't happen and the market starts to lean back against it, there's going to be a scramble for the exits. And so I'm anticipating that scramble to cause a demand. And I'm going to take advantage of the cash from the people that made a mistake and they didn't get what they wanted, and then the bulls who are being opportunistic here to take advantage of that. That's what I'm trying to place a bet on. It's about the narrative, it's about what's happening, and it's the only thing that's really predictable is when people make terrible decisions, and bears just really are the ones who usually do that. So I think this needs to kind of keep a general type of move to it. And if I don't get that, I'm not going to sit around and tolerate a bunch of stuff. I'm going to be like, oh, well, it's not the thing that I wanted to see. I'm snotty about this. I'm just stick my nose up in the air about it. I want to get what I want because I think I know what's going on. And that's how I place bets. I think I know what's going on here. So as this moves forward, again, I'm still looking at this. We're getting up, look at that, 17. So we were able to pop in there, see if we can keep this moving up a little bit more. We're at 203. So we're getting closer to, we got through that level, which was the 20, and see if we can keep moving on this apparent trajectory. It is, I'm regressing it with my eyes and creating essentially a timestamp for about where I think it's going to go. And that's why I call it apparent, because I'm using appearances. I'm not actually doing the calculation. I've done it. It's too noisy and your eyes work way better. So you just look at it. You can see that. Okay, some other events that are coming up here. We have the value area low. So, that's going to be something that the market will deal with as we get there. And then that low volume node. So these are probably the next things on the docket if these bulls can continue to do things. And they might correlate with this. Sort of watching them and looking at them going, oh, okay, yeah, so this moved up like that. Could sort of, happen next to each other. Not quite the direction I was looking for. You can see decay has continued to move in this direction, which isn't my favorite thing. It is not looking exactly like I wanted it to look. Moving down, we get to like here. Oh yeah, that's where we got. There's not really much to do. I mean, we know the risk, we know the stops are for the position. Watching this, I think this is the objective here, is to lean up into a bearish sample and keep our eye on this. Moves that are around 100 you could know are institutional. So if you're getting like 100 up, 100 down, 100, then those are institutional pops. I think they sort of hold them off until it's about 100, then you let them go at 100, and that creates enough shock value for essentially the market to actually move things around. I'm not liking this. It's down to 23 stuff. Because of the idea that I'm looking for a scramble. I want to scramble. I don't want to see further pressure on the bulls. I want to see those bulls say, hey, this is what's going on. Come in, do the thing, and now we're getting a move down a little bit more than I wanted. I don't like the idea of these guys who saw their profits here going, okay, yeah, I can get out. That's not what I like. That makes me think that the market is going to go, okay, well, we'll take your order here because we think it's going to keep going. I don't think the market should pick up their position from them. I think the market should not do that. It should do the other thing. So this I'm not the biggest fan of because of that concept. I think a lot of people are negotiating here, but this is a pretty decent move, and we didn't even get 50%. I just noticed a lot of times when you take a position, there's usually a time when you're sitting there going, okay, I made this much, and you, at some point during your trade, you see 50% of your position lost. But let's see. That's so interesting. Still 1%. Although all my other machines are like, no, okay, it's just that chart. Those charts are just behind by like a ton, like 7 minutes. Mm. This isn't the behavior I wanted. Worries me about open interest theft correlating. Decay kept moving. So decay kept moving down. Tension is almost to that zero, and we could get a 30-minute bullish zero test right into the close. And if this pops down and hits those stops, we're going to get open interest theft. And so that's the thing that's concerning me right now, is that the bulls might be going, oh, okay, well, let's just keep this coming down. So I'm dumping my position. Let's see. Okay, I dump my position. I am out. I'm going to wait and see about this. I think that that's going to, bulls, you're going to have a, see, if they move this down and they take out that decay retest, I think there's going to be a real push by those bears, the same enthusiastic ones. I don't think it makes sense for the bulls to do that. I don't think it makes sense for the bulls to push it down and hit those stops. They could correlate it with a zero test, but we'll be getting one right here into the close. I'm pretty sure, but that's going to cause some problems. I don't think you guys should do it. Don't think you should. All right. I don't think they should do it. I don't think that the bulls should let them hit that decay retest. It could create open interest theft and give them liquidity position, but I think it would inspire the bears to get too aggressive. And if they let this move down to push a new low, no, it'd be trouble. You shouldn't do it, bulls. You shouldn't do it. Okay, I'm going to I'm gonna try. I don't think that they should let that go down. Let's see. Okay. Got a position sitting. Oh, the risk. The risk here. All right. Let's see what terrible, terrible idea this is. All right. Into the close here. Let's do this. For a second there, I saw this hit 0%, but it was negative, and so if it's like, it rounds, so if it's like negative 0.5%, it'll maintain the negative, but it chops it off. So that's why I say negative or positive. So it didn't quite get to zero, at least I didn't see it get to zero at any point. Think so, John? Yeah, he said, so if tension gets to zero, would you look at a long here? Yeah, because of the context that's going on. I'm in a long here. I got in, it wasn't quite working the way I wanted. I got out, I took a look at what was happening, and I don't think it was actually betraying it, so I'm back in. It's not my favorite thing to do. I usually don't like to get back into something, but what good is all this analysis if you don't try? And I think I know what's going on. So here's the thing. John said, so a sweep the lows, open interest theft, bull zero test. That's where I think an ideal place to step in would be. And I agree. I do. But the bearish enthusiasm here, the amount of capital that came into the market, and the thing they were trying to get was tension under zero. We see the bulls step aside, wait, and then they get a decay retest. It looks really good. They're holding on to it. I think if the bulls let this move down and stop out this decay retest, that what'll happen is that stop out will sort of move things down a little quick, and it'll get tension under zero. And I think doing that would really influence the bears. And I think the bears would get really excited and then try and push again. And that the bulls have a decay retest here, which isn't, but I think if they keep this up, which if they're able to get this up, they're going to cause a real scramble with these investors. And this is the thing that I think they should do. I think if they push this up and cause that scramble, they're going to get a big response. If they push it down and get that open interest theft by tagging those stops, they'll motivate the bears to shove this down way further. And my concern here is that that would ruin the idea here. That there's a bullish idea that could really pay out to the upside if the bulls can come in and just, I mean, they really don't have to do much, and I think they'll cause an aggressive scramble. But I think you're right. A push down would give us open interest theft. It would give us a zero at the close. But I think it would take out that precedent. I really think that the precedent would go away with a push down through the lows. And that's the issue that I'm sort of taking with it. Maybe I'm being too nitpicky, and that might be the case. So, yeah. I think that these bears would get just insanely giddy. Yeah, they did. They finally got one. Really insanely strong, and the structure was not incredible. And I think that the way that it happened has a lot of people on edge here. And I think that if these bulls who got this decay retest right there, if they push this up and they're able to get like a good bit of a move, that all of those bears are going to flip out all at the same time, and it will get aggressive. And so that's why I'm like, if you guys move this down, you could get open interest theft, but you're going to take out that precedent. Those bears aren't going to be the same skittish as they were before, and that upside potential will just, I think, go away. And they have that for a little bit here. And so I don't think they should push down and hit those stops. And I'm putting money on it. That I think I know what's going on here, and I think that the bulls should pop this up, terrify all the bears, sweep it up as high as they can. I'll hop out, and the market can do what it wants. But I think that this push down has created this big precedent, this big precedent, and all that's just, I mean, like just a move up, just is going to cause a scramble, and that's the thing that I'm thinking that I see is a scramble on the way in. And this tension almost got down to zero, and I think that that's what they paid for, and they didn't get it, and that's going to cause a lot of extra stress. You put all your money in here, and you didn't even get tension, you didn't get probabilities, and then it's popping back against you. I think that's going to be very stressful for the bears. So that's what I'm looking at. I may not get it. It may just hang out in this range. I'm not going to tolerate a whole bunch more. My expectation was that this moves up pretty quickly, and that causes that demand spike, and then people get stressed and it pops up. If we don't get that, I'm going to sit and hold on to this like overnight or something. I'll wait until the next thing happens, and that's okay with me. But I think that over the next half hour, the bulls have a real possibility of getting that to happen. This is obviously just my opinion about this, and I think that you should do whatever you want, use your tools. But that's what I'm thinking. I do think there's open interest theft down there. I think it would wreck the whole concept. Maybe it would be good positioning. It would be a zero test. It all line up, and you're right, and I'm being insane. I am looking at options pricing. A little expensive. You know what? John, I think you're right. I think that if this is going to do what I wanted to do, I should have done it. Oh, it's going to be such a mess. I'm going to dump my position right here. And out. I'm out. So I'm flat. I don't think it's not acting the way I wanted it to. You know, like I described, like the behavior that you expect. You expect to see move up, and it just doesn't really slide down. That's how you get that demand going. You know, everyone's pending orders down here. It's just not really working. We're getting this sideways range. This is not what I wanted. You know, I gave it 2 tries. I got a point back on that last one. Wasn't looking. I just did. Just kind of cool. But I'm really concerned about it's not acting the way it's not giving me that look that I want. I wanted to see a pop up. And this is the issue. These bulls are going to run into problems. Is there no end to these decisions? If they pop it down here, they'll get that, you know, like John was saying, they'll get that open interest theft. But I think they're going to be running a risk with those bears. I think those bears are going to get really excited. We'll see. Maybe I'm just being a chicken. That's fine. I don't think so, but it's fine if I am. You can see, like, we had this trajectory, and you can see it's starting to cool off. Those bears are moving away. You know, it was almost like right in this area. Bears were like pending some orders, and then as we did this kind of thing, they're like, never mind, and they started to cancel orders, and you can see that they moved further away from getting that liquidity. They lost interest, and this whole thing was initially, it was decay retest, and I was looking for a lean up to sample the bears, and in doing so, I thought we could cause a scramble to the upside. But as John points out, you know, we could have a dip down and get some open interest theft, and I think that we totally could. I think that's the wrong move for the bulls. I really think that's the wrong move. Dip down, hitting those stops would be nice because they're like, oh, open interest. But I think the bears are going to get enthusiastic. They'll come in here. We will get that zero test right into the close, which is, you know, a nice thing to see. But I think hitting those stops is the wrong idea. I don't think they should. But I am concerned about it. I didn't get the shape that I wanted. You know, I didn't get the thing I was looking for. And so I don't want to play. Oh, Joe, I just read your comment. Says I actually went short and hit buy instead. Ooh, especially on today. Zero test into the close. Might as well hit. You might as well tag that stop. All right, we have our 30-minute bar closed, and that has popped this tension down under zero. So we have officially a zero test on the 30-minute chart. Now, zero test, you got to give a little flexibility because they're a little higher time frames. You got to give them a little flexibility when it comes to the way that you watch them play out. We're getting down to 18. If we get, we get down under here, and let's see, we see like 13-ish. Then we'll know those stops are getting tagged, and that's going to will end up being open interest theft, and it will be a bullish zero test on a 30-minute chart at the same time. I have concerns, which I think I've said. I have concerns. I think that pushing down and hitting that looks good to the bulls, but it's going to motivate those bears, and those bears are going to say, "Oh my gosh, I just love this. This is so great." And then they're going to want to come in and see what they can do. The problem that the bears are going to run into really is that if we get a zero test in the close, there's not really much to do overnight. And sure, they could push it down, but I think there's a really good chance that it pops up at some point overnight from the zero test. I think that the bulls essentially just stepped back, and this is their chance to go ahead and defend that 30-minute tension that was coming up, is looming in the future. There are stops right down below, which this just, this isn't what I wanted. This isn't the way that I wanted it to look, and that's what got me to sort of be on the edge a little bit. But I'm not going to play ball with a game that doesn't do what I want. So I think that since I'm not really getting what I want, which I was a little bit okay with it, sort of going along this angle here. Then, we moved down and it didn't quite get up and go, and that got me to say, you're not playing. You're not doing what I wanted you to do. And that's really what got me to leave. I don't like markets that don't do what I want. I tried to, bet and stuff, but you're not going to do what I want. I don't want to play. So the next thing here will be to dip this down and hit that stop, give us some open interest theft, see if the bulls can pick up a little OIT. And it could just come down and just be a huge pain and not hit that. But I think that the issue is again, it's those bears. They clearly are insane. Like the amount of money that they're willing to put in here, like they're enthusiastic. Moving this down and putting pressure on that stop is poking the bear. And the bulls may think that it might be, we could get some good liquidity there, but you don't want to do that. I don't think they want. I don't think they should do that. I don't. I think they should not do it. And if it doesn't happen and it moves off, that's okay. I took my bets. I was true to myself. I did exactly what I think I should have done in this situation, and that's okay. I'm comfortable doing nothing at this point. I had my chance, I took my bets. Now I'm going to sit back and observe. And I can see that it moved down pretty low and now it's moving up. And the thing that I want to express here, which is an important feature of what I do, is that I took bets on the narrative. I did it. I gave it a go. Those were my bets on the narrative. That doesn't mean I stopped trading the narrative. It also doesn't mean I've reversed or changed my narrative. I tried to participate where I thought was a good spot. Still think it was a good spot. And it wasn't doing what I wanted. So I'm going to step back and say, all right, well, if you don't want to do what I want, I can just track the narrative. And this is one of the big fundamental differences that I find between the way I like to behave and trade and the way that I see a lot of traders participate. And that is that they can't handle the idea that you could both know where the market's going to go and what it's going to do and not do anything about it. That seems to be just incomprehensible to traders. And it's because I value the narrative. I think this is a fascinating story right now, but I can't chase a market around that's not going to comply with the expectations that I have. And I won't do it. I won't. I think I did a great job. I think I handled it just the way I want. I'm going to come back tomorrow. Fine, just fine. And try, participate again. I might be up late tonight, most likely. I won't be up all night because tension's not high enough for me to be like, I'm going to stay up all night. If tension's really high, sometimes you'll find me posting in the middle of the night. Or if there's some real setups going on, a lot of times I'll stay up. Overnight trading is great if the structure's clear. Or in fact, I prefer overnight trading. It tends to mess around less. Okay, so I'm trying to make this clear that this is a fundamental difference between how I do this and a lot of other people do. I went ahead and took some bets in here because of what the narrative that I saw. I had expectations. I knew what I wanted. I knew where I saw it was going to go. I had all these ideas. I did that. It wasn't working. I'm okay with sitting back. And now I'm going to track the narrative. I see these moves. I see them going up. I see them going down. And what I'm thinking now to articulate this, and I say this because I've found this to be a really big point of concern for a lot of traders who listen and take any interest in what I do. I don't care. I can see what's going on, and this is a fight to me. And if they want to push it down, they can push it down. If they want to push it up, they can push it up. The point is, I don't feel like I'm lost. I know what's happening here. I see why the bears are saying, well, maybe we should head down there. Maybe we should hit that. I see that. I get it. John Evans, he pointed it out too. He's been following along enough. He's like, well, what if we just do this? And I see that. We could get a zero test and some liquidity. That's beautiful. But I also see the insanity that drove us down here. And that if we do that again, it's going to be crazy. And I think the bulls shouldn't do it. Did they pressure me out? No. Okay. So if they don't and they do pop it up and it's a great trade, I'm glad that I understood. For me, the most valuable thing is to understand. The second most valuable thing is the ability to place a bet based on understanding, not entries. I don't really like entries. Yes, of course, I sit and watch prices tick up and down just like the rest of us. But that's not going to get you a trade that works. I mean, I was able to participate in this twice and walk away with 2 points, down 2 points. I'm pretty happy about that. So I see this moving up here and I am like, oh, you guys got me. But the thing I want to make this is a psychological thing. The thing that doesn't fill me with FOMO, the reason that I don't seizure and chase a market is because I get it. I know exactly why it moved down. I know exactly why I bailed. I sat and described it pretty thoroughly. I was looking for this. I got something out. Else, I took a second look at it. I thought, you know what? I'm going to give this one more go because I thought we could see that happen. It didn't work. That's okay. And now I can watch this work and I go, oh, I see. Okay, so the bears didn't get that. They were trying to maybe trap them in here. And, the point is I do not chase markets. There has been nothing more devastating to a trading account than chasing markets. And you chase markets because you made this mistake. You thought you were right. And I'm going over this because I know this is a big problem. All traders will face this many times. You thought you were right. And the problem with this is that the term right here is final. When you think you're right, you're rigid. You're no longer flexible. You can't be wrong because you are right. So that means if the market goes the other way, you have no choice but to get blown out to the fullest extent because you're in this rigid state of rightness. Rightness is final. It says, I'm done. It's truth. It's over. And I try to stay in a flexible, fluid state of narrative where I can see what's going on and I observe the participants and I think there's a good bet. Am I right? I'm right about the narrative. Is the trade right? It could develop in different ways. The point is that I'm not filled with those emotions that I used to be when I saw a market move down and then it starts to move up and I go, oh my gosh, blah, blah, blah. And then I start to get FOMO. And the reason I got FOMO because I was stuck in a rigid state of rightness. And one of the problems with rightness is that in your head it means money. And human beings cannot deal with the fact that value vanishes rapidly. We suck at it. If it was worth $100 5 minutes ago, it's worth $100 right now, and you will find yourself getting defensive about value loss. So if you think you're right and the market does something else, you're in a state of trying to fight the market for that rightness which you just had. You're struggling to deal with loss. I'm not in a state of rightness. I strive as much as I can to constantly pay attention to the bulls and the bears and be in a state of narrative where you have coalescing states of possibilities in all directions. And I look for conflict to build in such a way that it makes one reality more probable than the others, as far as I'm concerned, with people. People. I thought that people would create demand if this moved up. It was the people. Not the numbers or the markets or the levels or the lines. Those helped. But in my opinion, I thought people would do it. And so the thing that keeps me from feeling that insatiable need to try and participate in something I think I missed out on is that I never finalized my narrative to a state where I was right. I will say things like, I know I'm right. I will say that. But it's not right about the bet. It's right about the narrative. Maybe my betting, the way that I placed my bets on this whole idea that this was just a bunch of nonsense and the bulls want to take advantage of it, maybe my betting strategy was wrong. That's an entry system thing. That's the way I enter. The narrative didn't fall apart, nor am I lost. I know exactly what's going on right now. I see the zero test coming into the close. I see that all of the retailers who are participating in this market are going to have to dump their position right here. I see the market running everyone out of time, and then we're going to get a zero test. I see that. I'm not lost. And I found that the thing that keeps you from getting that excited emotion that makes you unable to resist pressing the buy or sell button when you're actively trying to engage is that you're doing that because you finalized in the past. And that at some point in the past, you figured out what was going on, whether it was an entry or something. You said, I'm right. You took a trade maybe here. You became rigid. And so when things didn't work out in your favor, let's say you did what I did and you popped out and you said it's not working. Then as the market goes here, you're saying I was right. When you should say this is going on. It's a current thing. It's not a past thing. You were never right. No one is ever right. Nobody in trading has any idea what's going on. It's not true. That's not the point even. The point is to figure out the people, and they're constantly changing. The you that's sitting at your computer right now is fundamentally not the you that was sitting at your computer when you sat down earlier today. You are different. You can never go back. And human beings love to say, I was right. Let's go back to the old. Let's Let's have novel things happening. And that's just silly. It's not how the world works. In my experience, it's never been how people work. People are constantly like metabolizing reality and going in all sorts of weird directions. So the way I avoid this FOMO that I absolutely know that I could be feeling, and in the past I have felt, and that I don't actually feel right now, is that I know what's going on. I see these events. I know I dumped my position. I know where it went. And then as things move up, I understand what's happening. So I'm keeping up with the narrative, and I value the participants. I want to say that because I think it's an important feature of trading that a lot of traders miss. They see some sort of reason to buy or sell, and then if that trade, they get out of it and it doesn't make them a bunch of money, and then it does go, they get this emotion inside of them, and that emotion, I think, is stimulated directly from the fact that you became too rigid at the point of entry. You stopped thinking there was a narrative. It was just over inside of you. And so when you see it happen, it's like that you had a $100 bill and it's almost like somebody stole it from you. But nobody steals your money. It's that you have complicated people doing things. So I build these expectations, and when they don't work the way I want, I get snobby about it. I turn into a highly selfish, snooty high school cheerleader. Stick my nose in the air just like any ridiculously snobby person. I say, I don't want to participate in this crap. If it's not doing exactly what I want, you obey me or I don't play. Because that's how you get out of a position that's not doing what you want. You become a stupid, pathetic, selfish, snobby person. You say, otherwise, you start saying things like, well, it's okay. It'll work. It'll work. And you become this compromise enabler monster that's enabling the market to do whatever it wants. Markets don't do whatever they want. They comply with money. So if money's not playing, I'm not playing. And that's why I get so snobby about it. I could turn into a real biatch because that's the way you get out of a trade that's not necessarily failing yet, but isn't doing what you wanted. Stick your nose in the air, get snobby about it, and say, this isn't doing what I want. I don't like it. Snap your fingers if you have to. You need to get that attitude when you're going to meet expectations. That way you can dump that position. Say, it wasn't doing what I wanted it to do, and maintain a cool head to say, keep your eye on the narrative. What are the bulls and bears doing? What are their options? What's happening? And then you won't experience that feeling that's like, I'm missing out. You can watch the narrative, watch the fight, see how people are playing. Just make sure that your bets are true to yourself. Do not let the market push you around. Do not do it. Do not let the market do things to you that make you resent the market. If it's not doing what you want, and that's what you were expecting, you tell it no, you get out. If you can't do that, then you end up in a situation where that it's pressuring you in a way that you didn't want it to, and you knew you shouldn't have done. The upside is that if you dump a position and it goes in your favor, you don't chase it and end up picking the top. It doesn't trick you into accidentally buying something that was falling apart. You end up walking away from a small percentage of wins, but in my experience, a much larger percentage of losses. I think that this situation right here, if I had held on to it, it was just the way that the bet was working out and the things and stuff. I had some pretty clear expectations for what I was trading. It could do this, it could do this, it could do this, it could do all this stuff. In the end, it's going to be that if the trade's not doing what I wanted, that the probability of getting what I wanted drops a lot, meaning that this is more probable that I get one of these, and none of these are really what I want. So you'll find over time that if you're snobby about markets where that you're like, I know that you're avoiding a significant percentage of losers that just had to do with the fact that you couldn't figure out how to get yourself out. You'll be in this pickle where it's like, well, once you're in the trade, it captivates your brain, your emotions go off, and that's true. How do you avert that? And this is the process. You have an expectation, you know what you think, and if the market isn't doing it, don't be emotional. Don't ask about your analysis. Don't try and say, well, it's fine. It could go down here. I'll just move my stop. Don't do those things that create compromise after your entry. Get snobby, stick your nose in the air and say, that's not what I wanted. And just dump. Yeah, don't hope. John's talking about hope. And it is hope that he's talking about. You're right. It is hope. But as you're going through it, and since I just went through it, I wanted to explain what I was doing emotionally, because I know this is the underlying difficult part. I'm tracking. I'm not betting. I'm not betting on a price movement. I'm not betting on a 50% pullback. I'm not betting on a V-shaped market. I'm not betting on a higher low, lower high that breaks out and gives me two legs. I am betting on the people wanting to scramble for the door. I am betting on the story, not the market. So that's important because it helps you understand how I get in and out of things and place bets. I mean, I'll take risk. I'll put 15 points on a trade, risk-wise. I don't have a problem with that. But not if the narrative doesn't fit it, and not if it's not doing what I want. I mean, the other day I had 12 points on the last trade that I did on here. It drove a new low, which I hated, but it was teeth. I mean, I was expecting that. That was kind of the behaviors I was looking for, so it was okay. In this instance, I wasn't. And so it's the narrative that changed me. And it's the narrative that keeps me from FOMO. It's the narrative that keeps me from having regrets overnight. It's the narrative that makes me, it's just tracking that and placing bets on the narrative that you understand, the story. That's how you keep yourself away from it. If you get too hung up on other stuff, you find yourself dealing with other emotions as time moves forward that you can get away from if you just track narrative. That's how I get away from, that's how I keep myself from going, I know it's going to go up, so I guess I'm going to buy. I participated already. I gave it my go. I tried to take a bet on the story and it wasn't working. I didn't like it. I can sit back. I can watch now. If this tanks, awesome. The thing I'm looking for next is more conflict. I just want to see more trouble. I want to see it shoot up, shoot down, go sideways. You know, let's play this narrative forward. Let's progress the story a bit until we get to the next moment of conflict, and I'll try to take advantage of that. They always come. There's always conflict. There's always a buyer who gets turned upside down. There's always a seller who tries too hard. There's always stuff. So just wait for the next moment of conflict when you see the structure and hop in, take advantage of it. For now, I'm trying to explain how I avert myself from feeling FOMO after participating in this trade. And it's a trick that I've learned over years, which is don't focus on the trade and the money. I mean, you know, you're obviously counting them. It's like impossible not to know exactly how much you're making and losing. Focus on the narrative. Focus on the people. What are these bulls and bears doing? I saw what they were doing. John even brought it up. He's like, oh, they pushed down. They're going to get open interest theft. And I was like, I know, and it's stupid. And since it's not, you know, I was sitting there going, since it's not behaving the way I want, they're probably going to take a dive for it. And I think I know what that means. And I'm not mad at the bulls. I just think they're being kind of dumb. I'm not mad at the bears. I just think they're always dumb. And so I'm just trying to get that money in the middle. So this is how I avoid FOMO. This is how I avoid the emotional turmoil that most traders get knotted up in. They don't even realize it. I'll come back tomorrow a clean slate. But if you decided to hold on to this, say you bought here and you're holding on to this and it turned you upside down, you're like, oh my gosh, it turned you upside down again. You went from, oh, this sucks to regret. And John, you're right, it is hope, but your experience is essentially going to be, oh crap, I knew I should have dumped. And you start thinking these thoughts like, oh, I should have dumped. Why didn't I dump? I should have, and start being very like negative towards yourself. And you're walking down the road of letting the market do things to you that you resent it for. When you should have got into your trade with an expectation, and when that wasn't meeting your expectation, you should have just clicked close and said, it's not giving me what I want. I don't want to play. And in that way, you're true to yourself, and so you can walk away, win or lose. And you don't have that like emotional baggage that comes back at you and feels like FOMO. It feels like panic. It gets you to do stupid things. And the thing is that those emotions will stick with you, in my experience, 2 to 3 days, trading days. So if you make a bad decision today, you're going to be sort of working through that for 2 to 3 days. if you pay attention to it. If you decide to suppress all of the resentment that you have towards the market for doing things to you that you didn't like, you will just be walking slowly towards the margin call of your trading account. Because emotions compound. You must be true to yourself. You must know what you want. You need to do what you think is right, or you can't emotionally survive, because this will fill you with regret. If you make decisions you shouldn't have made, you will pay for those emotional lessons. So I'm just trying to help you understand. I have really strong opinions about how you should deal with trades when you're trying to participate with them, and if you should chase them or not in the future. They'll kill you. I know they'll kill you. I've watched it happen to many traders and myself. I can watch a trader build resentment over 2 or 3 days and then just watch them make a big, bad, dumb mistake. And it wasn't random. They'll say it as well. I can't believe I got into a trade and I thought it was going to work. And then they'll put their foot down. This is going to go the right way, and it blows them out. They lose so much money. And I saw that coming. And I used them as a trading signal, and I traded against them because it's one of the easiest trading signals out there. Is somebody who's building resentment starts to just make the worst decisions. You just trade against them. At least their money's going to a good cause. You can't do that. You can't do that. You'll die emotionally and your trading account. So that's how I get around this. Keep that narrative in your head. Place the bet you think you should place based on the story that's going on. Use your best entry system that you have. Don't betray yourself. If it's not doing what you want it to do, it's not meeting your expectations, get snobby about it and just say, okay, I don't, it's not that you say I give. It's that you're saying you're not doing what I want. It's a function of being controlling, not a function of submission. Markets do not push me out because they meet my pain tolerance. They push me out because they're disobedient little turds, and I don't want to play with them. It's very different emotionally because I understand what they're doing. I know who these jerks are that pushed it down to the low. I know what they're doing. I see it. And that's how I get around it. That's how I skirt all that emotional baggage that you can easily watch traders pick up. You've probably been through the cycle yourself. You know what I mean? It always ends the same way. You lost a bunch of money and you can't figure out how. This is how it starts. I'm good. I'm good. I know I did the best I could do. I tracked the narrative. I still think it's going on, but the bet didn't work out, and I'm going to wait for the next thing to happen, and I'm going to be patient about it. And when that conflict works out, I'm going to do the same thing there. And I'm going to be just as snobby then as I am today. I think it was good. I think the analysis was good. I think this is going to be really telling for what's coming up into next week. What happens here? If these bulls can't turn this bearish push into a spike up of demand and fear, they're idiots. They're just the worst. Because you guys heard me complaining about it all the way down. It was just poorly structured. It was too much money. This was, in my head, a made to order. Somebody paid for this. This is what they wanted, but it's going to backfire because they just got a zero test on a 30-minute chart, which is a bullish zero test, and the daily tension isn't next to zero. So unless this gaps way down tomorrow morning, way down, then tomorrow even tension open a little lower, daily tension is going to be over zero, and 30-minute is most likely going to pop right back up. Most likely. Not a guarantee, but that's the thing that it looks like to me right now. That 30-minute doesn't want to be under. Daily's over. It wants to come back up. That's the whole multi-time frame philosophy. You trade a 5-minute chart, you watch the discrepancies between two higher time frame charts. The daily doesn't want to be down. It's up. It's going to pull up on that 30. So this zero test has given us some upside pull, and structurally, the bears don't got. Here's what the bears do have. Bears have positions from here. So if this were to move down, they would have some power to move the market if they were able to pull that off until the zero test, whenever that is, the daily zero test. At that zero test, I'm going to guess the bulls are going to show up. I don't think the bulls are not. I think they're going to show up. If they get that through zero, okay, that's this moment here. So we have moment A, the market opens down. B, they get this down to zero. C, they get daily tension through zero. At C, this position will be extremely useful. If they get C, they still have to get the other things, which in my experience are difficult to accomplish. And they already spent way too much money just running at the ideas. They have done horribly, horribly. These bears suck. I just want to make that clear. They're horrible. I don't think this is going to work for the bears. I think it's going to fold them right back up, and we're headed right back to this bar right here. This is where we're headed to. When is it tonight? Is it tomorrow? I don't know. But I can tell you right now that this is the bullish position that got turned upside down, and that's where we're going to head back up to once the bears, if the bears break. Otherwise, they need to get daily tension under zero. So philosophically, that's when all of this positioning was a good idea. Currently, this positioning was high risk because they did it out of structure. It was out of risk. It was a lot of risk. It was. They had to put real money in here to make this happen. So that's why I'm like, if they push it down, it would get really enthusiastic for the bulls or bears. Totally would. But, I didn't want to hold through a push down like this. But this is a problem, and this whole thing's a problem. I don't buy it. I don't think it's gonna hold. So if we get a good opportunity tomorrow to try and ride this up, maybe maybe they push it down and we're able to get a daily zero test, I'd participate in a daily zero test if I could. If things line up and it looks good and we got some clarity, I'll participate in a daily zero test. I think the bulls would too. Otherwise, I'm just not sure that this is built correctly for the bears. I think they did a great job, but this is a thing. So our zero test is putting an upside precedent on the market. Tomorrow, if we open and this gets over, it's kind of funny because the bears were gonna get a zero test, but because it slowed down, now they probably wouldn't. Even if this is gapped up a little bit, it would pop up and they wouldn't get a zero test there and they could be in trouble. Decay could start to move up and give us, this would probably be where the zero test comes from. Decay moves positive, moves up, you see red bars like that, and that would be the next bear test. And then you want to see those bears fail. And boy, howdy, when they fail, this is the first place to get to, right there. If the bears come in and they pick this up and they just, bam, hit that down, I think what they'd be looking for is sort of like maybe hitting those stops, but I don't really treat stops the next day the same as stops in the day. So I wouldn't treat it like open interest theft like I would have today. But I think they would want to slam that down, and their objective would be probably to hit this and most likely to get to that bar, that right there, the 320.11 on the SPY. That's where I think that they would want to go, because that's the beginning of this whole move up was right there. So if the bears come in, that's their objective. Boom. If they do not, all of this effort, this fun effort, is headed right back up to that bar, which is about 326.82. That's where we're headed if they do not hit. And let me tell you, I think they're going to have to hit right off the open. I don't think they're going to get a couple minutes. They're not going to get a couple hours to come in position. I think right off the open, they're probably going to get a position. And if they don't come in and pick that up, I don't think we're going to. I wouldn't need bull position. I think if decay opens up here, it moves up, bears get a sample and they fail, I think it's just going to go. That's kind of what I think is happening here. It's just going to go. So this little sideways range, frustrating, definitely frustrating. I think they had a lot of potential and they walked away from it in terms of it could have shot right back up with the way that this built. They didn't do it? Okay. The next thing is this zero test. Now, I think that the bulls consciously, it seems like they moved out of the way. They picked up that decay retest, and I think they know. I think they know. But I'm not going to be doing anything likely overnight. Tension is too flat for me to really think that overnight trading has great probabilities. I like high tension pushing in a direction with some structure. So I'm not going to be doing that overnight thing. So tomorrow morning will probably be the soonest that I trade. And unfortunately, I think that if this does move up, there's not going to be much of a window for bulls to pop in. I think that demand will be quick. It'll be hot. It'll go right to where we want and it'll be over. Otherwise, if the bears show up and they hit, I'll probably just wait. I'm not a bear. I like selling because usually it pays really quick, but I don't like participating with people that I disagree with. And the way that I think they built this and the way that I think they'd be pushing this forward, I just don't agree with. So I don't want to put myself in that situation to be thinking that way, that I'm okay with doing things that I disagree with. So I'll wait for the next bullish thing, which will be this daily tension getting to zero. That'll be the next thing if the bears show up. So yeah. So that's where we're at. If you guys have different ideas or maybe you see something that I'm missing, I'm all ears. I know Alex said he saw some stuff. I read that stuff. I take it. Please, charts if you can. I know you can't do it on YouTube, but if you're in the Discord, when you share your idea, just a chart, screenshot it. We just love charts. I feel like if a trader gets on and says, this is the prices, and there's no chart, it's like nobody cares. If you put a chart and say, this is the prices, then like I always open those and look at them and consider it. So it's just something you have to. It's just, it makes it easier for me and all the other traders. If you stick a chart for us to look at, we love our chart. So post your ideas. Tell me what you think for going into tomorrow. I think it's going to be interesting. See you guys tomorrow.